global liquidity is at the moment super stable. So it's not going up, it's not going down, it's stable, and it's at the moment at a record high of 184.9 trillion US dollars. Why did we see an expansion? Well, it's mostly the PBOC, so the Chinese central bank that is still in quantitative easing mode. We saw the dollar is at its weakest point ever. Did you see the charts? I showed it in my live stream with George. So the dollar went most down since ages. It's the worst year has ever
For
been.
the
I think
dollar,
it's
yeah.
it's
It's
yeah,
on
for
a
the dollar. So
also on a 20-year support line. If it breaks down from like this 20-year uptrend line, I think we're gonna see stuff like gold and silver and Bitcoin absolutely put another leg in for 10, 20, 30%.
yeah, so that's very good. And then so the thing is, and I showed this in our Discord this morning. I don't know if you read it yet. So Michael Howell posted a very good thing, because that's the thing. Okay, so we base our investment decisions on global liquidity. At the moment, it's not going up, it's not going down. So what should you do as an investor? That's of course always the most important thing for us. So I put this screenshot in our Discord. Well, this is not the screenshot, this is the whole article. But so now is the thing. So what to do now? So the chart below shows the current global liquidity cycle alongside an average cycle. And as you can see here, we are nearing the end of the global liquidity cycle. So he says the peak may not be in, but we are getting close to an end. And I think everyone is starting to get afraid at the moment. And so now that's the thing. What should you do as an investor? And Michael Howell says, so if you are risk averse, this might be the moment to start taking profits. He is not risk off yet, so I'm also risk on. But if you are totally risk averse, it can be the time to go into cash, but still hold some monetary inflation hedges like gold. And I think, of course, Bitcoin is a good monetary inflation hedge as well.
Mhm.
And that's the thing. And how much can we still go up? Well, according to the current global liquidity cycle, only around 120K, which is nothing, because at the moment we're at 110K. So it's only, 10% up? And then that's about it. So that's the thing. So is the cycle now over? I don't think so. I think we will still go longer. I think we will go to Q1, and I think we will stay in all season, but it's the time to be cautious. So as Michael Howell says, I don't know if he wrote it here. So enjoy the party, but well, how does it go again?
Dance near the door.
Yeah, enjoy the party, but dance near the door. And I think,
or something like that. Yeah.
yeah, I think we're at the time when you really should be careful. I have friends of mine who asked me, who sent me a message this week. Yeah, should I buy? I heard XRP is a good coin. Should I buy? And so,
Always XRP. Always XRP. I don't get it.
And so my answer at the moment is we are nearing the end of the cycle. So I don't advise you to buy. Of course, we can still go have that parabolic move, but most noobs, if I don't babysit them, they will probably sell too late. They will lose money, and then it will be my fault. So
They'll never sell. They'll
yeah,
become diamond hands and bag hold all the way to zero.
that's the XRP army. That's how it's created.
Again, I absolutely do not understand the XRP narrative, because it used to be, oh, the banks were going to adopt it, but they've publicly stated that it's not for banks. And I think yesterday or the day before, Swift announced they're also doing a stablecoin project with their own blockchain. So that's not XRP. I know. Let's continue.
So to continue, what I've prepared as well is this chart. Everyone probably saw it. I think Zero Hedge posted it, and it shows the global M2 versus the Bitcoin price. Normally, global M2 always follows. Bitcoin always follows the global M2.
The trends,
And
yes. Mhm.
what I want to say about this is that global M2 is only 40% of global liquidity. So this chart is totally not accurate. If you want an accurate view, watch global liquidity, watch what global liquidity is doing, because it's not the same as global M2. And then another thing, so I'm going to explain why it isn't following, because if you look at gold, gold is following. And that's the thing. All the global M2, so all the liquidity is currently going towards gold. And that's the reason why it's not going towards Bitcoin, because Yeah, if you see here, so this shows it very clearly. When Bitcoin goes up, gold goes down. When gold goes up, Bitcoin goes down. And that's usually the case if you look at history. So I think, and I think I've said this last week as well, they don't move together. They're both monetary inflation hedges, but they take liquidity from each other. And I think this is good. So that's where I want to come. That's what my point is. So global liquidity might not be going up. All the liquidity might be going towards gold, but, and now that's the thing, Bitcoin lags gold. So that's still my thesis. That's still what I think Bitcoin is going to do. Bitcoin is going to follow gold's lead. So I think in a month or so, in October or in November, Bitcoin will still make this move up. And I still think we will see a last leg. Well, maybe not the last leg, but at least one more leg up when gold cools down. And that's how I see it. So I'm not super bearish following the global liquidity. I'm more neutral, but then if you look at gold, where still a lot of liquidity is flowing to, I think this will go to Bitcoin.